Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, retirement specialist and six-time author and fiduciary, Tony Walker.
Well, welcome, folks, to the Worry-Free Retirement. And yes, I am that little man in the sweater vest, financial fiduciary and retirement specialist, Tony Walker. And today, with our new podcast format that we've instituted on the Worry-Free Retirement, we're excited to get into the title of our show, which is actually Part 2, and what are the responsibilities of Tony Walker Financial for our saver clients. And to pick it up where we left off last week, in the studios with us is my favorite nephew down on the far end of the desk there, Wes Walker, along with my favorite son-in-law, Trey Juergens. And we got to have that long drum roll, Aaron. Throw it in there. And in the Bowling Green office, our own fiduciary there in Bowling Green, Miss Heather Hughes. Well, good morning, Heather.
Morning, Tony.
Thank you for joining us. You're on that central time down there, so 7:30 in the morning. That's a little early to be drinking coffee and doing a Zoom call, isn't it?
A little bit, yeah. My prime's about 10 o'clock, but we'll make it happen.
Well, thanks for coming in a little early to help us with this. And folks, what we're doing is we're going back over the philosophy of Tony Walker Financial and how we are unique to the industry because we're working mainly with savers. And how do we couple our Charles Schwab platform within this saver personality that we're trying to serve? So I thought what we would do here, Wes, Trey, and Heather, this new form we created last week, we mentioned this. And by the way, folks, if you want to go to youtube.com, type in Tony Walker Financial. We're putting all of our past episodes. So if you want to see last week's episode to tie into this one, I would highly encourage you to do that. This is literally labeled, folks, the responsibilities of Tony Walker Financial. And I think the first point we've made on this particular document, which they can download this at Tony Walker Financial, they like, is just really what goes on with this idea of the platform that we're trying to manage with Schwab and of also molding in those annuities with that.
Yeah, we talked about last week that our practice uses both annuity contracts and investments. This show and what we're talking about recently pertains more to the investment side, less to the annuities. But this document maybe just will help us walk through what does Tony Walker Financial do and what do our clients have to do for us to help them better serve their needs.
And Trey, we were talking before we went on, the responsibilities also are different. Talk a little bit about the responsibilities of managing money, maybe when somebody's in a 401k and what that 401k custodian is doing, which is obviously trying to grow it. But then all of a sudden they slip into this thing called retirement. And our responsibility is to also help them preserve what they've grown.
Right. So when we're managing the assets they bring over to Tony Walker Financial, we do it by way of a game plan. We have a full written game plan for distributions in retirement. The 401k, they're accumulation mode. They have really no goals but to grow that money. So when it gets over to us, we may lay in annuity products. We may lay in Schwab accounts that we're going to be drawing distributions from. It's up to us to manage this money in a way to use and enjoy it without running out.
Yeah, and we're going to have Shannon Ross on later to talk about trading. But Heather, you've been with me a long time and you've seen this transformation, and even when we tried to bring in Vanguard. But speak to the fact of our responsibility to not only make sure we're managing this money properly, but how it's more of just a piece in the retirement puzzle and why that retirement game plan is really what we're focused on as we move these clients through retirement.
Oh, sure. As you know, the game plan's near and dear to my heart. We've worked long and hard to develop a plan that's easy for our clients to understand and easy to follow. But the Schwab platform or the brokerage platform that we use is just a vital piece of executing that plan. So it gives us a lot of liquidity buckets and things like that to start immediate income with a layered process to carry them all the way through retirement.
All right, next, someone comes in. They want to do business with Tony Walker Financial. Are we going to help them determine what to invest in? And if so, how do we do that?
Very important subject. So that is truly the role of an investment advisory firm, is to help somebody understand what they should be placing their money into. A big part of our organization is meeting with these people on the front end. You meet with every person who comes in for a first appointment to help them determine what their needs are. And then from there, we can first lay out the game plan. I think that's important to show when do we need to take money from these accounts, how soon do we need it, those sorts of elements. But then next to that, what should they be invested in to most conducively conduct that? Yeah, I think when they come to us, it's usually we're asking the questions. We're saying, well, what are you looking to do with this money? And they go, well, you're the expert. You do this every day. I've just been working for 35 years. So it's up to us to kind of diagnose their both risk tolerance, but how they plan to use this money. Like Wes said, we've had folks come to us and they are looking to pay off a house or pay off a car. And if we were to throw this money real equity heavy into the market and something, I mean, just this year, we've had so many volatile times in the stock market that account could be down at the time that they go to draw a large distribution out. So if we understand our clients and what they're looking to do with this money, we can better diagnose how to invest it for them.
Think about this, Heather, just a second. It just dawned on me as Trey and Wes were talking, everybody's been in accumulation mode. They haven't had to touch this money. Now they're in retirement. Speak to the fact of how many times people need money in retirement and why we just can't be taking all this risk.
Oh, that's a great point, Tony. Yes, it's a different mindset when you do enter the world of retirement. When you have time on your side, you can take a lot more risk with the money. But when you start having to deploy those funds to live on or extra purchases or paying off a home, like Trey had mentioned, you've got to be a little more conservative. And we build those portfolios with that in mind.
Excellent. Next point. All right, the market, we've seen this before. The market's not looking good. Are you guys going to sit there and try to time the market and yank me in and out of the market? Wes, you're nodding your head. What is our approach if these markets start tanking on us all of a sudden?
Well, this point dovetails really well into the last point. We would try in the first place not to put somebody's money all into the market if they had a near-term distribution need. So hopefully we're not running into that. But when you're dealing with something as volatile and as unpredictable as the stock market, what has come to be known as the passive form of investing has usually tended to work out the best over long periods of time. Passive investing means you just buy the holdings you're going to buy in the allocation that you want. So if you're being very aggressive, you might have more in equities or stocks, and you just hold that for the foreseeable future. You don't try to jump in, you don't try to jump out. That is our philosophy at Tony Walker Financial, and we don't pull client accounts out of the market even if the news is bad.
And what if the markets are underperforming? Trey or Heather, if y'all want to jump in here, do we call them and make suggestions? Or I know this happened during the pandemic. What is our role there, Heather, if markets are going down?
Well, again, much to what Wes just said, we're not trying to time the markets. We do make adjustments within our portfolios, trying to, if we know that there's a certain industry that's really having an issue, we may try to exit a particular position within our portfolio, but we are not going to necessarily assume clients are going to jump ship because we wouldn't encourage that anyway.
But now I guess in relation to that, we got out of long-term bonds recently for that reason. I mean, not that anybody can predict interest rates, but we saw what was going on with interest rates going up. So we make those kind of changes, right?
Sure. So I say passive investing. It's not pure passive investing. Pure passive investing would be buying one single holding or multiple holdings and holding them regardless of what the outlook is in total. Really, it is a bit of a hybrid form. Sometimes we will make tactical asset allocation decisions. In the example you bring up, what we did was we shortened the duration of our bond portfolios. That's a lot of kind of gobbledygook, but if interest rates are going up, you don't want to hold very long-term bonds because the price impact on the downside is longer for longer maturity fixed income. So we shortened the duration of our bonds. That's an example of what we might do, but I think the key with this passage is that, if it comes out in the news that, people are fearful with stocks or there's one country going to war with another, we're not selling out of all of our stock market positions just based on some hunch.
Well, now we've talked about our responsibilities to our clients. Can we kind of say or agree that the clients have a responsibility to us, and what might that look like?
Yeah, we welcome phone calls. We welcome client review appointments, and that's where we leave it up to our clients to let us know when things are changing. They may not feel as comfortable as they used to with the stock market. They may have a major life change coming up, and that's when they just need to let us know because we're not going to be able to predict those things unless they tell us. So the game plan may say one thing. We may have an income plan laid out for the rest of their life, but if things change and they come to us with that, it's up to us to help react with them.
Well, yeah, obviously, as a Dick Walkerism, nothing stays the same. I mean, we really believe that. Heather, over the years, I mean, how many clients have come in, we've got the game plan, but the flexibility of our processing game plan has allowed them to meet those changes.
Oh, absolutely. I had a client in yesterday with just that. We were planning on him retiring, at age 65. And he's like, I just don't think I can do it anymore. I want to retire now. And, we look at the plan and we, see if we can make that happen for him. So, life's unpredictable. And so the plans have to adapt to changes. And that's the beauty of our process.
We were talking also a little bit, and I'll talk about this later on another show maybe, but we call it the revolving door concept. And how many people are coming to us lately, they're just frustrated. The firms always have new advisors. How important is it, Trey, to have that game plan? Because things are going to change, but also with you all backing me up, I'm not going to be here forever, but how the confidence is with our clients that they know where to come and how to meet the changes that are going to come their way.
It's all down to access and continuity. You've got access to 4 fiduciaries who can pull up your specific game plan, and we can obviously speak knowledgeably about that, but you're able to get us on the phone or get an appointment in person. It's not an 800 number. We're not located halfway across the country. It's not some new advisor every time you go in to ask a question. It's the same game plan and the same advisors able to answer whatever you need. Here's what I'd say too, and not to dog other firms. There's a lot of great financial firms out there that do great things for their clients. But with our firm, the way our compensation is structured, Trey and I, is that we're paid and Heather too, a salary plus a bonus, but it's not based on the production of us as advisors. So if we, start helping out a client who was an existing client and they have new money, we're just going to recommend the thing that suits them best, knowing that we don't have that conflict of interest where, I need to sell something to this person in order to make more money. That's a very common theme in the financial industry.
Oh, good point. And I think in the essence of time, we may need to take a quick break because one of our responsibilities is the whole thing of the in-house trading and all of the work we do. So when we come back, we're going to have our own Shannon Ross here. Shannon's in charge of our trading. And I think you want to stay tuned for this, folks. You're going to see the real difference between why you would want somebody that does all the in-house trading to meet the changes that are coming your way. This is the Worry-Free Retirement, and we will be right back. Don't let the fear of running out of money in retirement keep you up at night. Turn your 401k into mailbox money for life by logging on to TonyWalkerFinancial.com or call 877-499-9255. Before we get into the rest of our show, we've got a free book offer. We're talking about what can you expect from Tony Walker Financial, but one thing you can expect is a free book. It's called Expect the Best. It was written by Gary West about my kind of history in this business and where Tony Walker Financial is going. And guess what? For the first 100 respondees to this show, all you got to do is email Gina at TonyWalkerFinancial.com. That's Gina at TonyWalkerFinancial.com. Tell her you'd like a free copy of Expect the Best. Be sure, though, you give her your full name and mailing address because we're going to mail you a hard copy. If we don't have that, we can't mail you the hard copy. So we hope you take advantage of that. All right, back to our title here. This is part 2 of our investment philosophy, and we want to get into, gang, the strategies involved with this investment philosophy. So what we do, if you don't mind, since Trey mainly handles a lot of the new business, planning and annuities, and really Wes forte more is in the investment. So if you would, Wes, just go through these 5 strategies a little bit and then we'll talk more about them.
Absolutely. Yeah, we'll go through the high points of them. We manage 5 strategies in-house. So that means that we're picking the funds, we're deciding what should be included in them. We're not showing the individual holdings of each strategy. Rather, we're just showing the amount of exposure to bonds, equities, that sort of thing. We start off with our first strategy. This is called the Enhanced Yield Liquidity Strategy. And although that just sounds like a bunch of financial words all kind of put together, what that is, it's basically money market funds and short-term bond funds. This is what we would use for someone who has a very near-term distribution need, in that they would need to get money from the account relatively soon. It's not as safe as a savings account or a bank CD because there is some interest rate risk, but it is a great place to store money if you need it in the near term. The next strategy going forward is called conservative. That's where there is some equity exposure that's inlaid into the strategy. With conservative, there's 20% in equities, 80% in fixed income. This would be for that person that does want a little bit of stock market exposure, has maybe a slightly longer time horizon, but still does not want to see any big deviations in returns. Following along next, we have the moderate strategy, about 45% in equities, 55% in fixed income. This is kind of that middle of the road strategy for someone who might have a medium level risk tolerance or has, again, a slightly longer time horizon until they might need the money. And then we move ahead to growth. This is where we start getting more into the world of risk. So in the growth strategy, you have 70% in the stock market, including both international and U.S. equities. With this strategy, we are really trying to look for that person who has a longer time horizon, is okay with more volatility, and would like to grow the money into larger sums. Lastly, we have the aggressive strategy. This is the guns blazing, 100% in the stock market. This is not for the faint-hearted. This is not for someone who would be, needing a distribution from the account in the very near term. Rather, this is for someone who is okay with volatility, has a long time horizon, and is willing to wait it out through any sort of market gyrations to hopefully have a good return over the long haul.
Excellent description, Wes, of these strategies. So, Trey, let's say I bring the folks down the hall. They're ready to move forward. How do you review these strategies? I'm going to talk loosely about them, but what do you do when they say, yeah, I'm ready to move forward? How do we pick these things? What is your role there?
Yeah, again, it's really identifying their needs based on the game plan we lay out on the front end. So if they've got an IRA that's going to be with Charles Schwab that they depend on the first 5 to 7 years of income coming from that account, we're not going to throw that in aggressive. We're probably going to look at conservative, possibly that EYL if they're really not wanting to have any stock market exposure. But on the other side, if they have a portion of a Roth that comes over from their 401k when we roll it over, they want to grow that. That's money they want to leave to the kids at a tax-free basis. We may try to grow that over the 25, 30 years they're going to become a client. So it's up to us to help identify that, of course, with an understanding of their true risk tolerance.
And I know in the last segment, we talked about how often people need distributions and how we have to sometimes move these strategies and cash raises. We're getting ready to bring in our own Shannon Ross. What a lot of people don't realize is we do all of the in-house trading. And last year alone, in 2024, we did, in our office, 32,000 trades. So right now, let's turn it over to Shannon Ross, and we're going to ask her a few questions about the trading department. Well, good morning, Shannon, and thank you for joining us this morning.
Good morning, Tony. It's my pleasure.
Well, Shannon, you've done such an excellent job. You were one of the first in line when we got back into the Schwab platform in 2017. You've watched the growth of it. We've got over 340 million when we pretty much started from scratch. You were a big part of that growth. So first of all, thank you for all your hard work. But now you've transitioned into our trading department. And I made the announcement that last year alone, I know Wes has helped some with this, but pretty much you were involved in 32,000 trades. Now, why in the world would we need to be making that many trades?
Well, we do a lot of business, Tony. And so, yes, it's my pleasure to oversee the trading needs of our firm. But that not only includes new money coming in and securities that are needing invested, that also includes allocating cash for our annuity purchases, as well as raising all of that money that folks need to go back out to them for distribution. So all that combined equals that large amount of trading volume that we have.
Yeah, I know in the office yesterday, I had 2 different people that were in for client reviews and needed money, and it is so wonderful to just be able to buzz you, but describe the process. So on both these cases, these were people that needed some money out of the blue. What's the process on your end? What are you looking at? And then approximately how long does it take to get them their money? How do we link it to the checking accounts? Just explain that process to them, how easy it is.
Yeah, absolutely. So we've got the process down pretty smoothly because we send over $1 million to clients back of their money each month in systematic recurring distribution. And so it's a pretty simple process to get that set up. Once we have a clear picture of course, their identity and their income needs. There is a form that they complete digitally for security purposes, which links their bank account of choice to their Charles Schwab account. And then from there, we can send them whatever amount of money is they are needing, whether that's based solely upon their income plan or whatever their unique financial needs are. And we also have an in-house tax department, which specializes in helping them determine and discuss what what their tax withholding needs to be, and we can withhold that tax withholding on the front end for them for applicable pre-tax account. A lot of folks really appreciate that.
And Wes, you want to speak to what Shannon's sharing, because I know you're involved somewhat in the trading as well.
Yeah, absolutely. So Shannon touched on that cash raise, and I think that's a question that is pretty pertinent. What is a cash raise? You know, a cash raise is when we're going to take money out of an account and send it to somebody. If you're not, if you're working on your own and you're doing this, it might be hard to execute those cash raises. We mentioned the gentleman taking 45 minutes on the phone, but also there's something that comes into play here. If you take money out of an account, unless you rebalance that account as you're pulling the funds out, it's going to become what they call out of balance. Let's just say you took from your bond holdings, you took your distribution from your bond holdings. Well, now your account in proportion is way more in stocks than it was prior.
Good point.
So that's what we do in the trading department, is make sure these accounts stay in balance and then facilitate those distributions.
Well, very good. Well, I think we're about out of time for this segment. Shannon, thank you so much for all you do for joining us, and Trey and Wes, again, for assisting with the trading needs that our clients have as they come up. Folks, this is the Worry-Free Retirement. We'll be right back. It is estimated that each day over 10,000 people will turn 65, which means a lot of advisors selling a lot of annuities. Don't get stuck in the wrong annuity. Get a second opinion from TonyWalkerFinancial.com. Many people ask us, okay, Tony, if I'm going to put money in one of these strategies, especially if there's maybe the moderate growth, which has the equity exposure, aren't I risking my retirement? Well, I call this the investment pie chart. And in most cases, again, folks, we're working with savers, and we're coupling those strategies that we might have with Charles Schwab with either savings at their bank. It could be money that we put in annuities. So I'm going to show you exactly how an example would be of somebody having the risk and the exposure after we go through the selection process. So let's just say, so I can do the math real quick, someone has $1 million 401k that they decide to move over to Tony Walker Financial. They're retired. They're a saver. They agree that what got them there may not keep them there, and they are worried about risk, but they want some growth. They're okay with some risk. How would this shake out? Now, again, this is not for everybody here. We're just using an example. So what I might do is I might come in and say, hey, out of that $1 million 401k, we're going to put a small amount in our aggressive portfolio. Maybe that's 10% of your overall million. And we might put another 20% in our growth, and then we might put another 20% in the conservative, okay? The rest we might have in a fixed interest annuity, and then maybe a fixed indexed annuity with an income rider. So let's say now we're at 50%. So at first glance, you go, wait a minute, Tony, that's 50% with Charles Schwab. Well, let's think about this. Remember, these have no risk because they're fixed annuities, so 50% of your overall pie is safe. And then as we break this out, really this one and the growth essentially are the only ones that are totally exposed to the stock market. So maybe that's what, roughly 300,000. So roughly 200,000 of that is in the market. And that our conservative only has about 20% in the market. So if we have 20, that's 200,000, that's 40,000. So in this example, roughly about 250,000 out of the full million is actually in equities. So you see, folks, when we're working with savers, and even though we might choose some strategies that seem aggressive, and quite frankly are pretty aggressive, in most cases, we're not going to put all your money there. Our job is to make sure, based on the income plan, the game plan, that we've strategized the actual strategies to meet the needs of our clients. So again, if you need somebody like this to really sit down and go through these strategies, set up a game plan for retirement, why don't you do this? Log on to TonyWalkerFinancial.com, click on that Let's Get Started, or call us anytime at 877-499-9255. Welcome back to the Worry-Free Retirement as we continue our discussion on the responsibilities of Tony Walker Financial to our saver clients in the world of investment planning. I think, first of all, let's clarify something. I had a gentleman come in the other day and he goes, I know you're that annuity king and that's basically what you all do. And I kind of slowed down and said, sir, do you realize how many accounts we have with Charles Schwab? And he said, no, I didn't even know you did, Charles Schwab. So speak to that, Wes. How many accounts and how much, as of the date of this recording in June of 2025, assets under management do we have with Schwab, which is obviously non-annuities?
Sure. Well over 2,500 accounts within Charles Schwab. Our assets under management is roughly $340 million. So it makes up a significant portion of our business. We're not just an annuity-only shop. And then I think, too, it's important to talk about that within that Schwab platform, we've got a variety of different strategies and different reasons that we're investing money. If somebody's taking money out near term, like we've talked about, we've got strategies for that. If somebody has a longer time horizon and we truly are trying to grow it, we can do that as well. So it is kind of a one-stop shop for all retirement planning and financial needs. Yeah, I think having that platform has been so useful for us as advisors helping our clients. While they're in these 401ks, a lot of the time they give the opportunity to hit the easy button and throw that money into a target date fund. It's not a bad thing for accumulation, but when you get into spending this money and using and enjoying it, you're at a lot more equity exposure than a lot of our clients end up after we put a game plan together. And that's what comes with our game plans, is something that's custom and put together specifically for their needs in retirement. And I just had someone the other day, why should I pay a fee? Why do I need an advisor if I can call and get money out? He was calling once a month to take distributions, spending 45 minutes to an hour.
He had left the money with his 401k, right?
Money with a large custodian handling his 401k. Every time he needed money, it was an hour out of his day to call and request this money. And he was saving a couple pennies every year on fees, but he had no access. It was a brand new person to call every single time. It was just a huge headache. When we laid this plan out, he was like, okay, now it makes sense.
Talking on the fees too, I've seen expense ratios on 401k mutual funds in the 0.6 to 0.8 range, sometimes even 1%. That does not mean you get to call the person who runs that fund and request your money out of it. It just means that you're paying that for their investment expertise, but the access is very limited. Our fees are in the similar range and you get full access to our fiduciaries and staff. And speak to that, Heather. And again, I think that's a great question. Why would I move my 401k over and maybe have to pay a little higher fee with you guys? But what are they really getting when they have Tony Walker Financial in their corner?
Trey had a great point on that we offer just a higher level of service than the 401ks and the 800 numbers can. We know you personally, and we can implement that plan. We're rolling over the 401k sooner than you think you would, such as an in-service withdrawal, will allow us to implement the game plan faster, especially if we have an income annuity on the back end of that plan. The longer we can have that in the annuity and have that in deferral longer, the higher the lifetime payment that would be for the client.
And Heather, I know you kind of served the role as our tax planning specialist before TJ and Leanne came on, but you're still involved some in the tax planning. But I know we had a couple that just came on board, and it was very rewarding to really look at their tax situation. We even confirmed with their accountant that they had about $30,000 to $35,000 extra they could take out and keep them in the 12% bracket. They had RMD issues. We talked about QCDs. And I mean, they were just blown away with all of the things we were trying to do that I'm sure a 401k, I'm going to have to assume, is not going to take that kind of time to figure out all these strategies, especially when somebody's in the RMD age.
Oh, absolutely. In fact, I had another client in recently, brought TJ in as well, just as my backup on taxes, but we were talking the very same thing. Her real goal was to turn her 401k, or not her 401k, her former 401k, or her current IRA into a tax-free asset to pass along to kids. So we have been implementing a Roth conversion plan for the last 2 or 3 years. And, with us being able to look at her entire situation, her cash flow, we can determine how much it would be prudent to convert in any given year. Even in that one instance, she had some property she sold, so there were some capital gains we had to deal with. So we can really get involved in some creative and pretty particular types of tax planning.
Yeah, very, very proud of our role with the tax planning department. I think we're about out of time. Aaron's giving me the old chop chop signal. So Wes, Trey, Heather, thank you so much for all you do and for the amount of work you put in helping our clients and everything that you do for Tony Walker Financial. Folks, that's all the time we have today. If you have more interest in learning about our services, just log on to TonyWalkerFinancial.com. That's TonyWalkerFinancial.com. Click on that Let's Get Started. Let's get started with what's called the free 10-minute fiduciary phone call, where you and I will talk by phone briefly, and if we can help, we're going to set up an appointment, no cost, no obligation, to share that free proprietary game plan with you, or call us anytime at 877-499-9255.